Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, May the 6th. Well, as we turn the calendar to May, the markets are showing an awful lot of volatility. This week, both canola and corn were lower after posting new highs the week before. And soybeans, well, they just continue to struggle again this week. Also weighing on the markets is the forecast for better weather next week and the expectations for a big push in planting. The equity markets, well, they were lower this week as well, as confidence in the Fed's ability to control inflation is starting to wane. And with no improvements to the supply chain problems, the cracks are now starting to show. And when you have large losses in the equity markets, they often tend to spill over to the grain and oilseed markets. Our July canola contract was down this week $30.50 a ton and closed the week out at $1,157.60. The canola pulled back this week on lower palm oil values and the forecast for warmer weather as spring seeding gets underway. The July soybean contract was down as well this week. It was down 63 cents a bushel and closed at $16.22. The July corn contract was down 29 cents a bushel and it closed out at $7.85. As our July Chicago wheat contract was up this week, it was up 53 cents a bushel and it closed at $11.09. The Kansas City July contract was up as well. It was up 65 cents a bushel, closing at $11.71. And our spring wheat Minneapolis July contract was up 43 cents a bushel and closed at $12.09. The wheat markets were up this week on the concerns coming out of India that the current heat wave there has lowered the expected wheat production in that country. As well, we're starting to hear reports coming out of Oklahoma that is now estimating that state's wheat production will be 50% lower than last year. The June Canadian dollar was lower this week. It lost nearly half a cent. It was down 48 basis points at 77.48. The crude oil contract, however, was up and it gained $5.19 a barrel and closed out at 109.88. For next week, well, with spring seeding ahead of us, the weather will become the largest influencer, and delays to seeding will be supportive to the markets in the same way that progress to seeding will weigh on the markets. So we're going to look for canola to continue to chop back and forth. Trade between that $1,120 a ton to the $1,200 per ton range. For spring wheat, well, we did put in a new high this week and the trend is up. However, if the weather allows producers to get on the land and start seeding, then prices could pause and possibly pull back. So we're going to look for prices to basically trade the range between $11.70 a bushel and $12.50 a bushel. I'm Ed Baldwin with your weekly wrap-up for Friday, May the 6th.